Do you think we're underplaying the cyclical story embedded in some of these big tech names?
Yeah, we do, John. I mean, our fire and ice narrative is, I think, playing out. And while I agree with Lori that there's evidence that consumers hanging in for now, I mean, the market is worried about something because it's really historic how defensive the market is trading. Okay, so while the S&P 500 is only down 6-7%, which is pretty amazing in the face of the rate rise, I would not take comfort in that. Because the real signal underneath the surface is a market that is really shuddering about something, whether it's the war in Ukraine, the Fed itself, we know about that, of course, and then maybe there is a growth slowdown that the market's starting to contemplate. We don't have evidence of that, hard evidence yet, that earnings are going to have to come down, but we do think the signal from the market's pretty clear. Now, the good news on that is that the market's sort of priced for it, right? So if you have a different view, if you have a view that things are going to reaccelerate here or stay strong, then you should be rotating into the more cyclical parts of the market. That's not our view, but the market is speaking loudly. We think it is saying that we have a cyclical slowdown here, and last night's results, kind of portray our view, which has been all along that there's a giant payback in demand, not only for the obvious winners of the COVID pandemic, but technology broadly, is a cyclical group. It is a cyclical industry. And this has been a building sort of view that it's secular and it's not cyclical, and that's just wrong.
Well, Mike, your view also is that inflation has been a tailwind for revenue growth over the last year or so, and it starts to become a much more prominent headwind for earnings. Are we going to see that this quarter in these earnings?
I think we'll see some evidence of that, John, for sure. I mean, we've already heard about it from some companies. I mean, clearly, the spike in inflation from the war, on food and energy specifically is going to be like a tax on the consumer. I do think that will have an impact going forward, whether or not it has an impact, in the first quarter. But yeah, the inflationary tailwind, which has been just a straight through pass through to the top line, which, by the way, that's why we have inflation, right? Because companies don't pass it straight through. Now we're seeing the latent effects on costs, and that pricing power may not be as strong to pass it straight through, and then we should start to see that margin pressure. Once again, I would say the good news is that margin forecasts have come down over the last 2 or 3 months in line with that view, meaning if last quarter, fourth quarter was 14% net margins, the forecast now for Q1 is 12.5, 12.6 to be exact, and we think that'll persist through the rest of the year. So the risk is that those margin numbers have to come down for the rest of the year now, and we're going to learn a little bit about that during earnings season. We think they will.